Right now, something big is happening in the global financial system, and most people don't fully see it yet. The US dollar is quietly losing strength. Trust in traditional money is shaking, and at the same time, Bitcoin is moving back into the spotlight. Some investors are calling it digital gold. Others are calling it the next safe haven. But is Bitcoin really becoming the place people run to when fiat money starts to fail? And more importantly, what does this mean for your money? Stay with me, because in the next few minutes we're breaking down what experts are saying, why dollar weakness matters more than ever, and how Bitcoin could change the financial game as we know it. Before we go deeper, take just 1 second to hit the like button and subscribe to Macro Rewind if you want clear, simple breakdowns of global money trends, crypto, and economic shifts. It really helps the channel grow, and it makes sure you don't miss what's coming next, because trust me, the next few years in finance are going to be anything but boring. Now let's start with the dollar. For decades, the US dollar has been the backbone of the global economy. Oil is priced in dollars, international trade is settled in dollars. Central banks hold dollars as reserves. This special position is called reserve currency status, and it gives the United States massive power. It allows America to borrow cheaply, print money more easily, and influence the world financially. But that power depends on one simple thing: trust. Trust that the dollar will hold value. Trust that the system is stable. Trust that debt will be managed responsibly. Over the past few years, that trust has been slowly cracking. Governments printed trillions during the pandemic. Debt levels exploded. Inflation surged to levels not seen in decades. Even though inflation has cooled a bit, prices never really came back down. Groceries, rent, insurance, everything feels more expensive. At the same time, interest payments on US debt are rising fast, and the government keeps spending more than it earns. Experts now warn that America is stuck in a dangerous cycle. Borrow more to pay old debt, print more money to keep the system running, and hope growth saves the day. Meanwhile, other countries are paying attention. China and Russia are reducing their dollar exposure. BRICS nations are talking about alternative trade systems. Some countries are settling deals in local currencies instead of dollars. Central banks are buying gold at record levels. These are not random moves. They signal a quiet shift away from full dollar dependence. No, the dollar isn't disappearing tomorrow, but the direction is clear. The world is slowly diversifying. And whenever confidence in fiat money weakens, people start looking for alternatives. Traditionally, that alternative has always been gold. For thousands of years, gold has been a store of value. It can't be printed. It's limited. It works across borders. But in the digital age, a new contender has entered the picture: Bitcoin. Bitcoin was created after the 2008 financial crisis, when trust in banks and governments was badly damaged. Its core idea is simple: fixed supply, no central authority, transparent rules. Only 21 million coins will ever exist. No politician can vote to print more. No central bank can change the supply. That's why many people now see Bitcoin as digital gold, but with some extra advantages. It's easy to transfer globally. It's divisible. It's verifiable. And it doesn't require vaults or shipping. During times of uncertainty, Bitcoin often behaves differently than traditional assets. In the past, when banks failed or markets panicked, Bitcoin sometimes dropped with everything else at first, but then recovered faster. Why? Because once fear settles in, people start thinking long-term. They start asking, what asset can't be diluted? What asset isn't controlled by governments? What asset exists outside the traditional system? That's where Bitcoin enters the conversation. Institutional investors are now taking it seriously. Big asset managers have launched Bitcoin ETFs, and Wall Street firms are offering crypto exposure to clients. Even pension funds are quietly exploring small allocations. This is a huge change from just a few years ago, when Bitcoin was dismissed as a toy for tech geeks. Today, it's being discussed in boardrooms. Some macro experts argue that we're entering a new era where hard assets outperform paper assets. Hard assets like gold, real estate, and Bitcoin. When currencies weaken, scarce assets tend to rise. It's basic economics. More money chasing limited supply equals higher prices. But Bitcoin is unique because it combines scarcity with technology. It's not just a hedge against inflation. It's also a network, a payment system, a store of value that lives on the internet. Younger generations already understand this naturally. They grew up digital. For them, owning digital assets feels normal. Another key point experts highlight is portability. If you own gold, moving it across borders is slow and expensive. If you own real estate, it's stuck in one place. But Bitcoin can be transferred anywhere in minutes. In a world facing geopolitical tension, sanctions, and capital controls that matters a lot, we've already seen examples. In countries facing currency collapse like Venezuela or parts of Africa, people turned to crypto when local money failed. During banking crises, Bitcoin trading volume often spikes. These are early signals of how Bitcoin behaves under stress. Now, does that mean Bitcoin is perfectly safe? No, it's still volatile. Prices can swing wildly. Regulatory risks exist, and short-term moves can be brutal. Anyone telling you Bitcoin only goes up is not being honest. But when you zoom out and look at the long-term trend, Bitcoin has consistently recovered from every crash and reached new highs. That's why many experts now see Bitcoin not as a get-rich-quick asset, but as long-term protection against currency debasement. Think about it this way. If governments continue printing money to manage debt, the purchasing power of fiat currencies will likely keep eroding. You may earn more dollars in the future, but each dollar may buy less. Bitcoin, on the other hand, has a fixed supply. You don't need everyone to adopt it. You only need enough people to treat it as a store of value, and adoption is already happening. Major companies hold Bitcoin on their balance sheets. Payment platforms support it. Countries have legalized it. Financial products are making it accessible to everyday investors. Step by step, Bitcoin is integrating into the system it was designed to exist outside of. Some analysts believe we're still early. They compare today's Bitcoin market to the early days of the internet. Back then, many people laughed at email and online shopping. Today, they're essential. Bitcoin could follow a similar path, slowly becoming part of global financial infrastructure. But here's the deeper story. This isn't just about Bitcoin versus the dollar. It's about a changing world order. The financial system built after World War II is under pressure. Debt is high. Trust is fragile. Technology is moving fast. People want more control over their money. Bitcoin fits perfectly into that narrative. It represents choice. It represents independence. It represents a financial system where rules are written in code, not changed behind closed doors. That's why during every period of dollar weakness, Bitcoin comes back into focus. Investors don't see it as just another asset anymore. They see it as insurance. Of course, smart money doesn't go all in on one thing. Diversification still matters. Risk management still matters. Bitcoin isn't a replacement for everything, but more portfolios are adding it as a small but meaningful piece. And that's exactly how big shifts begin. Slowly, quietly, then all at once. If you're watching this and wondering what to do, start by educating yourself. Understand how money works. Learn why inflation happens. Study Bitcoin beyond headlines. Don't need a rush. You don't need to chase hype. Just build knowledge. Here at Macro Rewind, our goal is to help you see the bigger picture, without the noise, without the hype, and without complicated jargon. Because the more you understand these macro trends, the better decisions you can make for your future. As we move forward, keep an eye on a few things. Watch US debt levels. Watch central bank policies. Watch global trade shifts. And watch how Bitcoin reacts during periods of uncertainty. These signals tell a powerful story. The dollar may not collapse overnight, but its dominance is clearly being challenged. And in that environment, scarce digital assets like Bitcoin naturally gain attention. So is Bitcoin the next safe haven? Experts don't all agree on the details, but many agree on one thing. Bitcoin is no longer ignoble. It has earned its place in the global financial conversation, and this story is just getting started. If you found this breakdown helpful, don't forget to like and subscribe to Macro Rewind for more deep dives into money, crypto, and the global economy. And now I'd love to hear from you. Do you see Bitcoin as digital gold, or do you think traditional assets will always win? Drop your thoughts in the comments below. Share this video with someone who needs to hear it, and let's keep the conversation going. Thanks for watching, and I'll see you in the next one.